Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, January 28th, and this is the weekly market update. The disclaimer, anything that you see or hear on this podcast or video is not to be taken as investment advice. I am not a financial planner. I cannot give you individual investment advice. This is for information purposes only. Please do your own due diligence and research. It's your money. It's your responsibility. Okay, so here was a chart from Bloomberg, which I found interesting. And basically what it shows is 12-month average, trailing 12-month average of free cash flow yield for these very large international oil companies. And what I found fascinating was the fact that the top three companies with free cash flow yield among these super majors are all European companies. And why I found that surprising is because they have been on the forefront of uh, at least mouthing the words that they were going to transition to green energy. And you would note that the S&P, the average of the S&P 500 stock is a free cash flow yield of 4.9%. You see Chevron at 10.3, Exxon at 12.5, and then you see Total 22%. So that could be, a manifestation of just not spending a lot of money on um, new exploration projects. And so as this cash is rolled in from these higher than average oil prices, they've been able to have a higher cash flow. And I don't know, I didn't go into each one of these, you know, basically the title of the slide says capital discipline and high prices are adding up to a cash bonanza for big oil. But what I find interesting is that we saw the big announcement from Chevron this week that they were going to do a $75 billion stock buyback, which people have asked me what I think about it. I mean, I don't really follow the super majors, so I really don't know what they're doing except for a cursory, examples like this. But maybe instead of a lot of people have said that the stock price is a little bit too high, it's not a real value. And I say, well, why not buy another oil company? If that's the case, and we know a lot of these oil companies are selling at low multiples, then it may be a good idea to do that. But I'm not in the management there. It doesn't really affect me. I don't own these things. But I do find it interesting that these European companies have these tremendous cash flow yields. And I guarantee you that Total or BP or Shell could not get away with doing a buyback like that. Just the way that the political situation is in Europe, it just won't fly. But this did surprise me. But maybe it shouldn't have because, again, capital discipline, if you're not spending money, you're basically blowing down your production over time. It's going to come back and bite them in the butt probably. But, this is kind of fascinating. That's a pretty decent cash flow yield, 22%. And speaking of the buyback from Chevron, there was one of the many articles. I'll just give a few tidbits. It says Chevron plans to buy back $75 billion of shares and increase dividend payouts after a year of record profits that evoked angry denunciations from politicians around the world as soaring energy prices squeeze consumers. The stock repurchase program will kick in April 1st and will triple the size of the previous authorization unveiled in 2019, the company said in a statement Wednesday. The program is equivalent to almost 1/4 of the company's market value and 5 times the current level of annual buybacks. Well, this is what people want. This is what shareholders want, right? And of course, the demonizations begin. Only the wealthy will benefit. The Biden administration came out with a statement that why are you doing these buybacks for wealthy shareholders? Instead, you should be investing in more oil and gas to lower prices in the United States for consumers. You know, that's what they say, but when they they also have said, Mr. Biden has said he wants to put these companies out of business. So we've talked about this before, um, and we'll see. With a split Congress, it's not like they can haul them in front of Congress and have windfall profit taxes. It won't happen. And so I've explained this before that these companies are price takers or cyclical businesses. There's many years when they barely make any money at all, and they're net destroyers of capital. And so during a 5, 7, or 10-year period, there's going to be a couple years of super normal profits, and that's the time where they make hay that makes up for the rest of the time. And of course, with the Boobus Americanus and the rest of the people, politicians are going to come out and throw accusations. It's not really going to affect anything, but this is what's going to happen. Last blurb here. Even though energy prices have pulled back since the early phases of Russia's assault on Ukraine, I just love the press. Can't even have a financial article without getting some kind of dig in. Analysts expect U.S. oil companies' profits to stay strong because they have kept capital spending in check, unlike in previous boom cycles. Instead, the windfall has been used to pay back debt and increase investor returns. So, how is this actionable for us? Well, we hold not a lot. We have a few smaller cap and mid cap oil producers that aren't going to garner the same attention and have been already doing what a lot of the majors are doing, right? They've been paying back debt, buying back shares, announcing dividend programs, and that's what we want to see, right? So nobody's really going nuts and running around, letting the money burn a hole in their pocket. Spending is increasing. We saw that last week in the reports from 3 of the large oil field services providers, Schlumberger, Baker Hughes, and Halliburton. I don't have time to go in this week's market report on each one of those, but if you go and look at the transcripts of the earnings calls, all of the managements were very bullish going forward. So spending is increasing. It's just not like it was in previous cycles. And here is a chart that kind of illustrates that. This is Chevron's capital spending going back to 2012. You would note that the peak was back here in 2013 when they spent a little bit over $40 billion. This is the pandemic lows. Obviously, this is when oil prices were the lowest when they went negative. But you will note we're not even back to 50% of the peak levels. It is increasing, but slowly, because as I said before, no one's going to go drill baby drill with this kind of political situation or background that we have now. People aren't going to go and do that. Like I said, I've explained this many times before. I don't have to explain it again. This is how you keep your job as the CEO of an oil company. You give money back to shareholders. So this is from Crescat Capital. Tavi Costa. I would follow him on Twitter. He puts out a lot of good charts, but this chart is pretty cool. A lot of people aren't really paying attention to this SPR thing, like when's it really end and things like that. But this chart shows the smallest draw on the SPR for over a year. So you see how it's been tailing off basically through the fall now. And as we get into this new year, it's basically almost nothing now. So that's one of the things that we were hoping to see in conjunction with the Chinese reopening. We start counting these barrels, how much oil demand comes back with China, how much, add in the end of the SPR supply that has to be made up now somewhere else. And so, that's what I've been doing. That's why you get to that 103, 104, maybe 105 barrels a day demand sometime in 2023. And in a world that is not capable of supplying that level of daily production. And as we just said and noted in the previous slides, these super majors, at least, and many of the mid cap and juniors are simply not spending enough money to change the situation. And again, they're not going to until the zeitgeist, until the societal attitude and government's attitude towards them changes. That's a long way off. This is why I think that you're going to have higher sustained oil prices, energy prices across the board, with volatility, of course, for a longer sustained period of time. Here we go. This was off Twitter also. This is number of passenger miles. I put it here, air travel recovering nicely. You see the basically air travel basically, or number of passenger miles grew at anywhere from 6 to 6.5% a year compounded annual growth rate. And you can see what compounding does over time. You've basically more than doubled the amount of passenger traffic since 2004. Then you saw what happened during the pandemic, basically dropped by more than half, and then it's been slowly working its way back. And so, we need to get back. We'll get back to these levels. Maybe we won't, because if you have noted, several, I don't know the exact total, but some of the European countries are limiting the amount of flights that can leave their airports each day. But again, this won't matter when you start talking about the emerging markets. When you start talking about China and India and all these places, it's just going to overwhelm anything that the Europeans do, or even the US. So this is going to recover. That this is what I'm trying to make the point, that when it comes to oil demand and jet fuel demand, all these things, we haven't even recovered from the pandemic yet. And we're already, having some issues with oil demand, or oil supply, sorry. And so if you start looking at things like this data points, I mean, you're still off by, well, at least from last year, another million passenger miles have to be added back just to get back to even. And like I said, you have to make up for these other years as more people travel, as people, again, in emerging markets, as they get wealthier, they start traveling on airlines. It's like one of the stocks that I have in the AIA portfolio has the majority of its has all of its investments in India, and the largest holding in the company is a controlling stake in the second largest, I believe, airport in India. And we're talking tens of millions of people a year going through the place and growing rapidly. So I expect this to continue. There's also, I was taking a look at this the other day. There is some airport operators that haven't fully recovered either. These are pretty decent businesses. They're almost like pipeline businesses, or kind of like highway toll operators. It doesn't really matter, which airlines operating at the airport that they're running. They get fees for, the number of passengers go through the place. You get landing fees and all this stuff. So air travel, like in Latin America, is still recovering nicely all over the world. And so you have several actionable, potentials here. Some of these, if you want to look into it. But also, I mean, just jet fuel demand. You could see what, I mean, it should easily be, even considering the last 3 years of trying to get back to normal, we could easily be over, 5 million passenger miles for 2023. I just don't see, I see continued, especially China opening it up now. And like I said, almost all the countries now have put aside their travel restrictions. We should see more and more of a recovery. I think 2023 would be, you'd be closing in on the old highs. This was an interesting article. This is something that I said would eventually happen. These things take time, of course. I'm talking about changes in the political environment, changes in public opinion. When the pain starts, when the high prices start, when the threat to your livelihood starts, all of a sudden, then your views on things have a tendency to change also. And what we have here is an article that was on oilprice.com. German public opinion now favors nuclear power. Some snippets from the article. For decades, Germany has maintained a love-hate relationship with nuclear power. Currently, Germany has 3 existing nuclear reactors that produce 6% of the country's power supply, a far cry from the 1990s when 19 nuclear power plants produced about a third of the country's electricity supply. Russia's war in Ukraine is forcing a rethink of energy security, not only in Germany, but also by the entire continent. Up until last year, Germany and Russia were major energy partners, with the latter providing the country with the majority of its oil and natural gas. But Russia's war has led to Europe and Germany scrambling for alternative supplies as winter looms. Germany is now rethinking its nuclear phase out strategy, and the public is falling in line. Nuclear energy is seen as a preferable energy source to a fallback to burning coal. According to Dutch-based anti-nuclear group WISE, nuclear plants produce 117 grams of CO2 emissions per kilowatt hour, much lower compared to burning lignite, which emits over 1,000 grams of CO2 per kilowatt hour. So even this anti-nuclear group shows in the data that nuclear uh, is 90% less of a CO2 emitter, and yet they're anti-nuclear. I don't know these people who they are, but this is what I said would happen. I mean, this is all about energy security. This is all about certainty. You know, if you read the article, it explained the whole genesis and the progression of the anti-nuclear movement. You know, how it's went back as political things changed, political attitudes in Germany changed over time. You know, had this big movement in the 70s, late 70s, early 80s, the Green Party. They were anti-nuclear. Then other, more moderate governments came in there and allowed for nuclear power and gave extensions. And then you're back to this green-led coalition that's turning all these things off. But in the end, we go back to, stealing Doomberg's, profound statement: when politics meets physics, physics wins every time. And so reality is setting in, and people are getting upset. And so when public opinion, these are politicians, they'll figure out a way to, you know, or maybe they won't. Maybe this particular coalition will go away and a new coalition will come in to power that's not going to be so negative towards nuclear power. But to shut down 16 out of your 19 nuclear power plants, that's crazy. And if you look at the age of some of the plants, they're not that old. I mean, Germany's really being stupid about this, quite frankly. And when you see, we've already showed and talked about the protest out by the lignite mines, the surface miners. It looks like this hellscape or moonscape with this huge bucket miners, huge monstrosities, with the police out there in riot gear keeping the protesters away. So I think that, you know, hopefully this will create the opportunity for Germany to reverse their views on nuclear power. They were a little bit hasty after Fukushima. I think Chancellor Merkel, but I'm not German. It's really not my problem. But what I'm saying is I think that again, I think eventually, no matter what, uh, I've never seen these societies collapse themselves over ideology. They move in these directions until it becomes too painful, and then the political zeitgeist or the political uh, Overton window is driven by the extremes, right? And then what happens is the great middle of these societies that isn't paying attention half the time finally wakes up when a crisis happens, and they say, wait a minute, what's going on here? Why are my power prices up 3 times? Why is my business why am I having to shut my business down because I can't pay for the power? And that's when people that's when you have the change. So it takes time, right? It takes sometimes several election cycles, but this is very positive for the world, and positive could be positive for uranium, and another brick in the wall of the bullish thesis. So this is what happens. Everybody was a couple people bagged on me, said, "Oh, you were wrong, John, in your thesis. We didn't really have this big collapse in Europe." Well, you didn't. I admit that. I didn't. I don't think anybody expected to have as warm of a winter as we had. For the Europeans to spend €500 billion on basically sucking up all of the LNG cargoes, paying whatever to get their storage capacity up, or their natural gas storage. and they did what they needed to do. That's not repeatable over several years. Eventually there will be a cold winter in Germany or in Europe, and you won't be able to suck up all the LNG around the world. And what has happened, this isn't the only reason in Pakistan, but this is what's happened in several countries. Because the Europeans are so much wealthier, they can outbid countries like Pakistan and Bangladesh and other emerging countries for these limited pool of LNG cargoes. And that's partially what happened in Pakistan. It also happened in Bangladesh, a couple other countries where they simply cannot pay if they're bidding against the Europeans. The Europeans, they're just so much more wealthier. So we have this huge energy crisis in Pakistan. Pakistan's not a joke; it has 230 million people. So what basically happened there was the government was having this. I can't believe this is another example of stupidity of government. So they came up. They said, "We'll fix it. We'll. How we'll do this is during the nighttime hours, we will shut down a lot of the power plants, and that will, because people are sleeping and the demand won't be as high. The problem is you can't do that. You have to maintain to keep the grid viable for other reasons, thermal reasons in power plants. You can't just take thermal power plants up and down all the time. Most of them are designed not to run like that. There's specific, plants that are designed for peaking operations, and the typical power plant's designed to be brought up to a steady state and just run it continuously. And so basically what happened here is they got a big mess, and basically the whole country had a blackout. So you had water issues because water pumps, sewage issues. I mean, you can read the article. It was a total mess. Okay. And here's a few snippets from the article. The long-awaited winter energy crisis has finally hit, but it wasn't in Europe. On Monday, almost the entirety of Pakistan was left without power when a misguided energy saving strategy by the government backfired. Runaway inflation, a severely weakened currency, and rapidly emptying foreign exchange reserves have left Pakistan on the brink of economic collapse. The country of 230 million people is plagued by overdue energy payments and was seeking to cut costs by lowering energy use when the plan went off the rails, leaving people across the country without power or water for more than 12 hours. Economists and development experts have been warning for months that Europe would not be the real victim of the European energy crisis. Rather, it is the import-dependent and cash-poor countries in the developing world that will suffer most. And so, okay, you're like, why are you telling me this? Why do I care? Because this feeds into my theory of the continued further bifurcation. This opens the door for Russia and China and Middle Eastern countries to step up and say, okay, we want to bring you into the sphere of influence. We want you to be part of this BRICS. Maybe 230 million people as a ballast against India, which is there's all these machinations, all these political things going on, and so you could say, well, we won't let you. And how do you feel if you're in Pakistan and that part of the reason is that they have a lot of internal issues there that are self-created, but part of the issue is they don't have the money and can't compete with bidding against the Europeans for these cargoes, these gas cargoes. So that gets out there. And so, this could be more part of the, well, give us more access to your ports as part of Belt and Road, and we'll get the Russians and Iranians to make a deal with you. I mean, you could think about the possible, what could happen. I'm not suggesting it will happen, but I'm suggesting is that this is another uh, log on the fire of, well, why am I, the Europeans and the Americans, the Western powers, don't care about you. You think they're going to go on opinion pieces on on whatever the Fox News is in Pakistan and say, well, we have an incompetent government here. It's our politicians' fault. We mismanaged the economy for decades, and this is, the culmination of that. No, it's going to be we were outbid by the Europeans and these, that's easier to say, blame someone else. And so, but you're going to see more of this, right? This is about energy security. You see what happens, a country of 230 million people without power or water for 12 hours. Now, it's not the end of the world because as I've talked about before, I mean, with the war in Ukraine, I have family members there that go without water and electricity and heat for days sometimes. I mean, you can survive. It's not pleasant. It's not fun. But again, it doesn't make people happy. Let's put it that way. And this is it just opens opportunity for this further bifurcation, for this, you know, emergence of that Central Asia, you know, belt from Turkey across the stands through Pakistan up into China, with Russia, supplying a lot of the raw materials for them. So I'm not saying that's what's going to happen, but I just thought this is interesting because that's kind of my thesis. What's going on? The bifurcation of the global East and global South away from the hegemon, and these type of things are going to incentivize people to into the orbit of, you know, hey, I'll make a deal with you, Russia. We'll pay this much, or you'll give us credits or whatever, and that gives Russia and China and these other folks, more influence in these areas. Is they're constantly you're constantly seeing, these trading, like I said before, countries don't have allies, they have interests. I was just reading an article about Uzbekistan, and Uzbekistan was saying absolutely not. We will not get into this three-party deal about natural gas with Russia and Kazakhstan and us. And long story short, that kind of went away, and then Gazprom's in there making a deal. So um, countries say people say all kinds of things. They're trying to get an advantage. They're trying to position themselves for a negotiation. What they say publicly is very, interesting for the newsies, but what is actually happening in real life? What are the actions? That's what you need to be interested in. So here we go. North Asia cranks coal imports to fuel industrial reboot. Thermal coal imports into China, Japan, and South Korea, three of the world's largest coal users, hit their highest combined total in 16 months in December, as the North Asian manufacturing powerhouses primed their economies for growth in 2023. Japan and South Korea have extensive supply chain ties with China, which meant that each country suffered slowdowns in both productivity and demand growth in 2022, as China's pandemic curbs stifled movement of goods and people over much of the year. But thanks to a slew of stimulus and easing measures passed by Beijing that are designed to kickstart a revival in China's economy this year, factories and industries throughout North Asia are now also primed for a pickup. So again, I think I mentioned it in a video a week or two ago that China's coal use made an all-time new high record in 2022. I suspect that will continue into 2023 as they open up and economic, you know, activity accelerates. And as this article intimated, uh, you're going to see the spillover effect to their trading partners like South Korea and Japan, which also are large coal users. So, long story short, I continue to be bullish on coal. We've seen coal prices pull back recently. They've been at, like, extraordinary highs over the last, year or so. But again, it's another market, another commodity that's hated and that can't really expand and meet demand. And so I don't see coal going away, at least in Asia. Maybe Pakistan should build some coal-fired plants. But anyways, this is interesting because I continue to maintain that I think not everybody's figured out what's going on in China. It's going to accelerate very rapidly, and the Chinese have pumped a ton of liquidity. I think this was a Reuters article, but you're going to see the spillover effect now into these other countries as, chips or whatever they're making is cross-border trade, that a lot goes on between these countries. And so as China's economy emerges out of, these lockdowns and this hibernation, you're going to see activity accelerate. And of course, economic activity requires more energy inputs. So you're not back to normal. Now you're going to get back to normal on coal demand. We talked about the previous slide earlier in the presentation about airline miles. I mean, we're not back to pre-pandemic yet. So when we get back to pre-pandemic, I think that's when we're really going to see, possibly, I'm not saying it's certain, but a good possibility that we're going to find out, how short of energy we really are. That's my opinion. So this is positive for. I didn't get a chance to go to the website or listen to this from KazAtomProm, but this is from Art Hyde, Jekyll Capital. They're pretty good on the uranium sector. I think they're in Dallas. This hedge fund's primarily uranium focused, I think. But anyways, this tweet came out this morning. I haven't, like I said, I haven't had a chance to deep dive this and look at the Kaz. I tried to bring up the KazAtomProm website, and for some reason it wouldn't come up. But anyways, it says cap operating update out overnight. Realized production finally catching up to market. 6 to 9 month lag has been well flagged, but supply chain and well field issues resulting in decreased production guidance for 2023, likely 4 to 5 million pounds lower is what they're saying, and calls 2024 targets into question as well, in my opinion. So I guess the idea was that KazAtomProm came out with some news basically saying they're having some issues and they're forecasting decreased production of 4 to 5 million pounds for this year. This is in a market that's already undersupplied. You may recall, or you may not, that during the last bull market, one of the things that really got the bull market going, Cameco had an issue at one of its mines. I can't remember which mine it was. Was it MacArthur River or Cigar Lake? I don't know, but it was an accelerant. It was an inflection for the market. It was one of the mines up there. I can't remember off the top of my head, but they had a production issue that was pretty significant, and that's when the market really started to take off. I'll have to look that up to make sure which mine it was, but regardless, that's basically what happened. And that was not in the context of, this huge build out. I mean, nothing was really going on the demand side. It was just stagnant demand around that time, and we had that tremendous rally. And now we're in a situation where, as I've pointed out many times in many videos, all the positive news we're seeing on the demand side as demand continues to grow, and we get, extensions of reactors, new reactors being built, Japanese reactors coming back, and then we have on the supply side a market that was already undersupplied is now going to get hit by 4 or 5 million pounds. Take that away. So eventually, we're going to get to this inflection point where everybody's going to start realizing what goes on. Again, I would encourage you to read the Harris Kupperman article he wrote on inflections. He was talking about it in his Adventures in Capitalism blog. I'll put a link in the show notes, which will be below. And he points out some other issues that could be very positive catalysts for 2023. It looks like we're starting to get some action in the spot price. And we'll see. I mean, this is the kind of thing that can scare some fuel buyers and say, all right, we were sitting around here waiting, playing chicken a little bit or musical chairs. It's time for us to move. And so, as more contracts get written. Another thing I want to talk about when we talk about uranium investing or speculations, and I mentioned it on the live stream yesterday. We had a live stream to commemorate the 10,000 subscribers. You can go watch that. I do apologize if it was pointed out to me that I missed a super chat, and that's bad chat etiquette. If I missed your super chat, I apologized. Your question, because you're paying to flag the question so it gets addressed. So I apologize for that. Hopefully we won't do that in the future. But anyway, getting back to the subject, you have a couple few companies that are moving from developers or previous mine operators like Paladin, right? Their main mine has been shut down on care and maintenance for a period of years. Liner Heinrich in Namibia, and it's going to require a lot of money to bring it back online, something like $80 million. They raised the money. You had another company recently that has a very prospective mine in West Africa that is issued $100 million units, I think, equity. And a lot of people are getting aggravated by this. They're like, well, I'm being diluted. This is not dilution. This is this is presumably what people wanted. See, we're making the trend. We're getting away from the sugar plums and unicorns, where people could say, "I like this company. I like that company. I have a basic thesis about uranium, and I can just put my hopes and dreams on this horse." And now these things have to actually start performing. It's one thing to speculate and say, "Yes, the management says this in the presentation, and I think this is going to happen," and yada yada yada, and the cost per pound is this. But as I said in this live stream yesterday, now you're going to get down to where the rubber meets the road. Now you actually have to build the darn thing and bring it online, and that's a different story. And so, the point I'm trying to make is what you might want to think about if you own some of these companies that are getting ready to transition. I mean, Cameco and KazAtomProm are big companies and have a lot of experienced people, top-notch people, access to top-notch engineers and all this stuff, and you just see that they're having issues in KazAtomProm. Cameco's had issues in the past, and these are very, very large mining companies that have been doing this for a long time. And so if you're progressing from being a junior miner or a developer, and now that you've signed some contracts and you want to put the mine into actual production, you really need to watch what's happening there, because the companies will not be able to get by on, future aspirations that retail investors have put on the stock. They're actually going to have to perform. And let me tell you something, building a large, complex industrial facility like a mine is not easy. And so you really need to pay attention about who's doing it. Have they done it before? Have they been successful? Or, what you have to be careful of is, well, this management really hasn't built a mine, but they have this consultant. I mean, when I start hearing about that, that's makes me scared. How many really successful uranium mine builders are there in the world? I don't know. These are questions you have to ask, though, because if, let's say, for XYZ company, they have an asset, they've been telling everybody how great it is, all the investors and analysts are very high on the project and think it's terrific, and then they raise all this money and then they start having problems, I can guarantee you the stock price is going to suffer. I guarantee you the stock price will suffer. You won't be able to get past on, hopes and aspirations at the Vancouver Resource Conference that people have been peddling for the last 5 years. If you're going to transition, this is why I'd like to see a lot of these juniors just sell out to bigger companies. If you have a real mine, if you have a prospective asset, just sell it out or combine with another company that knows what they're doing and go that route if you can. Trying to just issue a bunch of equity and having a single mine operation, I'm not saying you won't be successful, but it's a lot harder than I think most retail investors think. I've built many industrial facilities. I've never built a uranium mine or any mine, but other things I have been involved with. And every day at the project meeting is a fire hose of problems. All kind. I'm not even going to get into it. It's a ton of problems, and so $100 million can evaporate real quick. And when you have consultants involved, I mean, how invested are they in it? I'm not saying that they're not competent. I'm not saying that EPC contractor's not competent. I don't know. What I'm saying is, really pay attention now as some of these companies try to transition from building the mine to, or from, being a junior and living off, hopium, driving the stock price, to now you have to execute, build the thing, commission it, and operate it profitably. You may there's been many, many mines, not just uranium mines, but many mines that have had all kinds of great, feasibility studies and things like that. And then when they build the thing, it just doesn't work like they thought. One of the things is like the block and cave mine at Oyu Tolgoi in Mongolia. It's not, they had a lot of problems. I'm not sure where it's at. I haven't been following the situation for a while, but I know that as they brought the thing online, it had a lot of cost overruns. The block and cave method they had was touted as being the best, thing since sliced bread, and then they had some issues with it. So it resulted in some operational issues. Luckily, they had an open pit mine that was still operating, so I think covered up. And I don't know if those issues are resolved or not, but it's just an example of what can happen. Okay, these are complex endeavors. And so just don't assume that, well, they're going into production. They signed a contract with the Chinese National Power Company. a nuclear power company, we're good to go. They're going to supply X amount of pounds at this price, and I put it in a spreadsheet, and this is the share price should, double or triple over the next couple of years. Don't assume that. You need to really pay attention if you're involved in companies like that, because building and operating complex facilities is not as easy as people seem to think it is. So again, big bull on copper, as I've said many, many times before. Without sufficient copper, you just don't have the energy transition. You don't have the electrifications of the economy that many are pushing for. And here's what we have here. We have, Chile being one of the largest copper producers in the world. This is the production in billions of pounds per year. And you see that since 2018, the copper output has been declining. It's in free fall. And if you pay attention to what's going on down there, they have a newer government that's not as, shall we say, mining friendly. As a matter of fact, I think a project recently was canceled, and then I think I read an article where the government there, because of the lithium mining potential that they have there, they're going to create a government mining company to administrate that. That should work real well, because there's been, so many success stories of government-run mining operations that are well run, and people know what they're doing. They're not infested with political cronies or, graft and corruption. There's only the best and brightest work for government mining companies. I'm being sarcastic, obviously, but if you're going to have this electrification, as I've said before, you know, you need increased production, not lower production from one of the major copper producers in the world. Okay. I mean, you've got like Peru, Chile, and I forget the other country that's like the top three copper producers. And I know both Chile and Peru are struggling. And so if you don't get the production that you need, where's the copper going to come from? As have repeated before, I like these provocative statements like, I'm not sure it's exactly 100% dead on, but Robert Friedland, mining billionaire who's discovered two major copper mines in his career, Oyu Tolgoi being one of them, and another one in the Congo, I believe, recent one that's in production. Katanga, I think is the name of it. I can't remember. Anyways, uh, he says at these mining conferences that in order to meet the goals that the world has put forward for the energy transition and electrification, the world needs to mine in the next 15 years, I think is what he said, 10 or 15 years, the same amount of copper that has been mined up to this date. So what I'm trying to tell you is we need to really accelerate copper mining. And again, this is another place, another industry, another sector where insufficient investment has been made. And when you see one of the major copper producers, i.e. Chile, in decline and starting to drop off like 2022, maybe that's because of COVID. I don't know. I don't know all of the stats for the country, but then you have governments now in place in some of these places that are, I don't want to use the word anti-mining, but they're not as supportive of mining as previous governments have been. So uh, again, you're going to struggle against all the easy stuff has been found. Head grades are going to be lower. Costs are going to be higher. So you're just going to have a lot of problems. So does that mean this energy transition happens? Maybe not. It's probably not going to happen the way that many people are forecasting. Maybe it's only, 10 or 20 or 30 or 40% of what we thought, because we just don't have the raw materials. And so you still have the same amount of people that require energy. And so what does that mean for coal demand? What does that mean for oil and gas demand that we thought was going to go away? Remember peak demand? Peak demand is supposed to happen in the next couple of years, according to all the analysts. Okay. I believe oil and gas are going to grow, demand for them are going to grow for a few decades at least. We're nowhere near peak demand. And this, this should tell you the story. This isn't just a one-off. This is all over mining, whether just about every sector in mining is facing the same thing: complete underinvestment, declining production, declining reserves, lack of investment, just at the point where all more production and more metals needed. So I don't know how to explain it any simpler. That doesn't mean copper goes up next week or next month or in the next 3 months. But over the next 3 to 5 years, I guarantee you copper is going a lot higher, because it's not even just about the energy transition. It's the continuing development in the emerging markets. Gorian and Rosenzweig, I think like 3 or 4 years ago, wrote an article just about copper demand in India. And, again, how many mini splits, how much copper's in each mini split, and what's the market penetration of mini split air conditioners in India? And as people get wealthier, it's hot and humid there. What about those 230 million people in Pakistan? What about Bangladesh? What about Africa? What about the, billion people in the world that have never flipped a light switch? So you can see where this is going. And you can see, I think you should be able to understand by now the what's actionable here longer term. Very simply could have a recession. I get it, worldwide recession over the next year, like some people are forecasting, and the copper price wouldn't go up because, copper demand would probably not grow or go down. But that's a short-term cyclical phenomenon, downturn, or inside of a secular multi-year, probably multi-decade bull market. And so this doesn't help, right? This is the confusing nature of just one political administration in the world, i.e. the United States, the Biden administration. It's kind of good that we end on this slide. At the beginning, we were talking about the Chevron buyback and how the Biden administration was castigating the oil industry, and Chevron in particular, about spending money for wealthy shareholders to buy back stock to make them richer instead of, investing in more oil and gas. But in the meantime, they're telling the oil and gas industry that they're going to put them out of business. That's the words that they use. They use those words. And so you have this example here of this very large mine up by Ely, Minnesota, that they've been talking about building for years. Okay. And if you've ever been in northern Minnesota, it's a very good place to go for vacation, the Boundary Waters, camping, canoeing, all that stuff. And so, but it's kind of a depressed economic place also. And so they were going to have this mine. It's an underground mine. It's not an open pit mine. And, when the Obama administration was in, they kind of killed the thing before they left office. Then Trump brought it back. And then the Biden administration now is killing it again. So the point being, it very well could be. I don't know. I haven't seen the environmental impact study. I don't know what it says. I don't know all the politics up there with the First Nations people or Native Americans and the people up there. I have no clue. What I'm saying is I see more and more of this type of situation inside the context of, I just explained why we're not going to have enough copper. And the Biden administration wants to have this energy transition. They're probably the biggest advocate for it in the entire world. And again, we're killing off these, potential huge mines. But no one has anything to say about what goes on in places like Africa, where you have child miners and things like that. I guess what gets me is the hypocrisy. I don't like the hypocrisy. And that's one facet. Okay. Personally, I don't like the hypocrisy. But if you look at this, what's actionable, there's no way you can have this energy transition if you're not going to mine enough copper. And you can always find an excuse now, because all the easy stuff's been found. The stuff in the middle of nowhere, deserts and all. Now you're going to have to start making some compromises. And this is the problem. This is what Alex Epstein talks about in his books about oil and gas. You can't just say that all mining's, because it's going to have a potential effect on the environment. And it's so precarious, that we can't put any controls in place, that we can have to just ban all mining, because anywhere you go in the world, you can make the case of why you shouldn't mine there, whether it's some little lizard or some smelt in a stream or some type of mosquito or whatever, what have you, or the Boundary Waters, whatever the excuse is, or the local people, some activists don't like it, and some NGOs got in there and filed lawsuits. Then you can't have the energy transition, because the copper has to come from somewhere. And so let's look at some of the snippets here. The Biden administration moved Thursday to protect northeastern Minnesota's pristine Boundary Waters canoe area wilderness from future mining, delaying a potentially fatal blow to a copper nickel project. Goes on here and says the Interior Secretary signed an order closing over 350 square miles of the Superior National Forest and the Rainy River watershed around the town of Ely to mineral and geothermal leasing for 20 years. That's the longest they can do it without congressional approval, by the way. And that's what I'm saying. You can have this reverse in the next administration. That's part of the problem. You have to have a actual policy here. You can't be swinging back and forth between, extremes between every 4-year election cycle. That's not going to work. Twin Metals says it can mine. This is the name of the LLC or the company that owns this. Twin Metals says it can mine safely without generating acid mine drainage that the Biden administration and environmentalists say makes the $1.7 billion project an unacceptable risk to the wilderness. Twin Metals says its design would limit the exposure of the sulfide-bearing ore to the effects of air and water. I don't really know. The point I'm trying to make is that you cannot demonize all of this development. You cannot tell the oil and gas industry to go out and drill because you're a populace and pump prices are high. You're keeping one eye on pump prices, and if they go high, you're going to castigate the oil companies and tell them to drill with all. I mean, they're taking in the money. What are they supposed to do with it? Okay. I mean, if it was drill baby drill time, then I guarantee you Chevron, as I illustrated, a lot of oil companies would be out there drilling. Okay. But they're not going to do it in the context of being, demonized by the federal government, or by the media, or by NGOs, or get sued. You have people suing Shell in the Netherlands about the fact that, like, their cigarette companies, or somebody tried to sue Exxon a couple times about they knew about global warming and did anyways. Do people not understand that without oil and gas, you die? Without sufficient oil and natural gas, billions of people could not exist on the planet. It's that simple. It's not a hard case to make. And yet we let these, I said this before, I think on the live stream yesterday. I'll just finish up here. The adult person understands that life is a series of trade-offs. We make trade-offs all the time. We make compromises all the time. We have a certain amount of money in our personal life. We can buy a car, we can buy a house, we can save for a vacation, we can go blow it at the bar on Friday night. There's opportunity costs, there's trade-offs, there's consequences for doing anything. And if we say that, if you ask the average person, I'm not talking about radicals on either side, which are very small minorities, vocal minorities have you. If you ask the average person, yes, of course they want the environment protected. Yes, but they don't want to sacrifice their standard of living. They don't want to become poor. They don't want to struggle. And that's what these dense forms of energy like hydrocarbons have allowed for us. Okay. They have allowed us to operate machines, to have processes that are supplied by energy inputs to make our lives easier, to make our lives more enjoyable, to make our lives longer, to make them more comfortable, to make them productive. That's what these fuels do. And if you're going to electrify everything, but you're not going to allow the mining of the copper necessary to allow for the electrification, then I'm just looking at a crazy person. So without getting into name calling or political situations, the bottom line is this is good for us. It goes back to what I've said before, and I'll close on this. Heads we win, tails we win more. And so with that, close out for this week. Appreciate again, we had a pretty good time on the live chat. You can take a look at it. I mean, it's just me saying thank you and then answering some questions for like an hour. Kind of enjoy doing that once in a while. But that's it for this week. And, again, the show notes will have links to the articles. And also, if you are interested in subscribing to the newsletter, it's down there. Also, a link. I would ask people that are subscribers that listen to this. I mean, my email is available. If you have any issues with your subscription, just email me directly. A lot of times, people have all kinds of funky email addresses, or, I mean, if you got Hotmail or like something like that, it's the stuff gets lost. So please email me directly. My email's available, and I will rectify the situation as soon as possible. Okay, guys, that's it for this week. Appreciate your support, and we'll talk to you next week.